What's happening, YouTube? It's Simon 466 Cards, and today we're going to talk about economics, we're going to talk about interest rates, and we're going to talk about the impact of interest rates on the sports card market. There is a theory that I've seen a couple of different places. I've seen it from Dustin, the sports card dad, also from Filmington, he's mentioned it, and I feel like some other places as well that I don't quite remember, just to be totally honest, that interest rates decreasing in 2024 will lead to more people shifting their money to sports card, and that as a result, sports card prices might be able to have a bit of a bounce back as a result of the impact from decreasing interest rates. My thoughts are I very respectfully disagree, and I disagree strongly, and I will explain why. But first, I think it's important to explain to the best of my ability what I believe the rationale is as to why this theory exists. Like, why do people believe this, right? So I'm going to walk through some of that before I explain why I don't think that's the case. So on the screen here is the US Fed funds rate, which is, for all intents and purposes, the interest rates for the US. If you want to Google what the US Fed fund rate is, go ahead. We're not going to do that here. Just believe me when I say this is what all interest rates are based off of, right? And so during the pandemic in 2020 to 2022, it was essentially zero for almost 2 years here, right? And then it's jumped back up significantly in the last couple of years, and we're at a quite a bit of a high compared to where we were even before the pandemic, when it was close to 1.5%. And so the theory is that this period of zero or near 0% interest rates also coincided with the boom in the sports card market, and as a result, the interest rates was the catalyst that led to that. So let's compare two charts here, right? The top two are exactly the same chart. I'm just going to compare them to two different charts, which is why there's two copies of them on the left and on the right. So we're going to add in and overlay the LeBron James Topps Chrome PSA 10 rookie card. And so you can see here, for the first bit of this chart here, right around when the pandemic started in 2020, there is an increase here, right as the interest rates are close to zero, or the Fed funds rate. I'm going to use those two terms interchangeably. Just know that going forward. And so you could definitely make a case for this first half of this 0% period. This is somewhat in line, right? But right around 2021, right around the beginning of 2021, is when it peaks. And so even though from 2021 to the end, for all of 2021, interest rates are essentially zero, this LeBron card crashes significantly before interest rates start going up. The US Fed funds rate starts going up right near the beginning of 2022. This card started going down well before that, at the beginning of 2021, and it has been on a decline for the last really 3 years, right? And so that's my first thought, is that while it did coincide with the spike, it didn't last for the entire period that interest rates were zero. Now, as an economist, there are some thoughts about, there is a theory, a very strong theory, a very valid theory about expectations and how that impacts the market, right? So one could argue, and I do not agree with this theory, but one could argue that even though interest rates were zero, one could expect that they would decrease in the future, and that's why these cards started going down, because there was an expectation that this would eventually be happening. I don't agree with that, but in theory, you can make that case. Okay, we're going to compare it to one other chart. It's the Luka Doncic Silver Prism PSA 10. You're going to see the exact same thing, right? Right when the pandemic started and when interest rates, or the US fund rate, was essentially zero, that's when things started going up and up and up, up and up and up. And then at some point it hits a top, and then it starts going down. And again, that's well before interest rates started going back up from the essentially 0% interest rate it was at for 2 years, right? And so again, the first half of this chart, you could make a very good case that 0% interest rates are driving prices upward. I don't know that the second half of this 0% period, you can make that same case, right? So from a chart perspective, I'm already left second guessing this theory, because the data and the charts don't really back up the idea that 0% interest rates are going to lead to an increase in sports card prices that is sustainable. Maybe for like a short bump up, but even then, and you're gonna see why. I don't think that these two things are aligned. But let's recap this theory. There's the cause and there's the effect. Low interest rates in the general economy lead to a positive impact on the stock market because of an overall positive impact on the economy, right? And so as a result, for the hobby, for sports cards, that means that low interest rates also means it's a positive impact on the sports card market, much like the stock market. That's the theory. Again, I don't believe this, but I believe that is the theory. And the first reason why I don't believe low interest rates will lead to a positive impact on the sports card market is there was a 7-year period from 2009 to 2016 where the Fed funds rate was below 0.5%. Essentially zero again. Where was the hobby boom for that 7-year period then? Keeping in mind that this most recent time when the Fed funds rate was close to zero, that was a 2-year period. This is a 7-year period. It's 3.5 times longer. I don't think there was a boom. I'll be totally honest. I was around in sports cards then, but from what I've been told and what everybody said, like this was a very, very down market for sports cards. There was no growth during this time, and so if low interest rates and interest rates that are essentially zero will drive a big shift into sports cards because as an alternative asset, and people will move their money into cards. Why didn't this happen from 09 to 2016? That's when another time when interest rates were essentially zero, and I don't think there was a boom back then. So that's the first major red flag for this theory. The history just proves it's not the case, right? So we will keep moving on. And so I guess what I'm saying here is this is a case where people are confusing cause and effect. Low interest rates definitely lead to a positive impact on the stock market and on the economy as a whole. Doesn't mean that it has a positive impact on the sports card market. And the reason for that is, and I feel like I'm saying this over and over and over again, and this might need to become my new hobby motto, perhaps. Sports cards are not stocks. They're not the same thing. Stop thinking about them the same way. They're not the same. And I've made a video in the past about it. I'll link to it in the description below. But sports cards are not stocks. Stop thinking about them like stocks. They're not. They're very different things. And so I'm now going to explain the real cause of the sports card boom. For the overall situation, the pandemic was the cause. That led to a dramatic economic slowdown, and we were all stuck at home with the whole restrictions, right? On the economy side, as a result, interest rates were lowered to make sure the economy didn't just go into a full recession, right? And as a result of low interest rates, for sure, that was a positive impact on the stock market. But that wasn't the impact on the hobby. That wasn't the cause and effect. It's because people rediscovered cards when they were stuck at home due to the pandemic restrictions. They were bored, they were looking for something to do, and a lot of people working from home, they couldn't go out for dinner, couldn't go on trips, couldn't do anything. They had a bunch of money laying around that they couldn't spend it on. So you have people bored with nothing to do and extra income. So then they started to be like, oh, I remember sports cards. You start digging around in your basement when you're stuck at home cleaning and looking for things to do. Or you hear about sports cards during the pandemic as a thing that people are into, and you look into it, and then people flood into the market. That's what caused it. It has nothing to do with interest rates. Interest rates had an impact on the economy and on the stock market. But it's the being stuck at home with nothing to do and a bunch of extra money that caused the boom in the sports card market. Nothing to do with a low interest rate. And that's why the cause of both of these things on the economy side and on the sports card, the actual root cause is the pandemic, not interest rates. That's the real cause and effect here, right? And that's why the hobby is not being driven by interest rates. There's no correlation between the two. Or if there is one, it is minuscule. Again, if you look back to the 09 to 016 period, The hobby didn't boom back then for a 7-year period, right? And so that's kind of the crux of this. And I want to bring it back to these two card charts, right? The LeBron rookie card and the Luka rookie card, right? There are two charts that look very similar to these two charts, but they're not any at all related to interest rates. Doesn't this chart look very similar to this LeBron chart? This one I've put on the screen right here. You got a big spike at the beginning of the pandemic, peaks at about right around January of 2021, and then crashes back down. Very similar to the LeBron card, peaks in January 2021, and then a slow decline back down to where we were before. Very similar. You know what this chart is? This is a chart of Peloton stock. It's a Peloton stock chart. Peloton, remember that, right? The bikes, everybody's bought a bunch of them during the pandemic so they could work out at home. Let's keep moving. This Luka Prism Silver chart. I also see a chart that's very similar to that. So you can see here it peaks a little bit before 2021, maybe late 2020, and then just a slow decline. It kind of holds on for a little bit here, and then decline. Very similar to this. You know what this chart is? It's the Zoom stock chart. And so, why do all of these things look familiar? Why do they all look similar? It's because the cause and effect is the exact same thing. There were new people entering into the market, and then they left. Like that's the easiest answer. People bought Pelotons because they wanted to work out during the pandemic, and that's why you saw all the commercials, a lot of beautiful people on bikes and teaching class and that kind of stuff. Not all talk about Peloton anymore because people now can live their lives. They can go to the gym. They're not stuck at home looking for things to do. Same thing with Zoom. People couldn't communicate with anybody else and stay in touch during the pandemic because they didn't see them face to face, so they started using Zoom. And that was a big thing for a good year or two. And now nobody uses Zoom anymore because you can just FaceTime or see them in person, right? Like, we've now gone back to normal life. The pandemic is over. All the things that we did during the pandemic are over. As a result, Peloton and Zoom stock have returned back to more or less where they were. And that's what happened with LeBron and Luka's cards as well. The key is all of these things are driven by new people entering the market, and the decline is new people leaving the market. The growth was unsustainable because it was driven by the pandemic and not interest rates. And with that theme in mind, that's the key for improving card prices. It's for new people to enter in the hobby and then to stay in the hobby. And so that's why interest rates won't grow the card market noticeably. Like, it might have a minor impact, but it's not going to be, it's like a drop. It's like a drop in the ocean. There's no real impact that's noticeable, right? And that's why I don't think the theory holds. Like, it has nothing to do with interest rates. I'm very certain of this. But there is one thing that can significantly grow the card market. Because again, back to the top of the screen here, the key for improving card prices is for new people to enter the hobby and stay in the hobby, right? That was a problem with Peloton. That's a problem with Zoom. That's a problem with, LeBron and Luka and all these other cards that boomed and then busted. It was unsustainable because it wasn't like a gradual, slow but steady increase because people were slowly entering the market. It was like a big flood of people into the market, and then they all left once the easy money was gone, and the economy opened back up, people's lives opened back up, society opened back up, right? Pandemic restrictions went away. There's only one thing that can actually significantly grow the card market and sustain it. You've seen what they've done, and that's Fanatics. Like, let's just be honest. They are the only entity that can bring people to the card market and have them stay in the card market. Because the way they're bringing people in, it is about getting them interested in cards. And not because they're bored or stuck at home with nothing to do. They're trying to get into that psyche to get them to be interested in cards, to think they're cool, and to like and love collecting them. because that's the thing that will get the card market to grow. Not interest rates. It's more people loving collecting cards. And that's what Fanatics is trying to do. Whether or not they're successful, who knows? But if you're looking on a thing to keep an eye on as a proxy for growing the card market, it's not interest rates. It's what Fanatics is doing. And that's the end of the video. I would love to hear your comments and thoughts as to whether or not you think what I've said is true, or if you think my theory is out to lunch. Would love to hear your thoughts either way. As we sometimes do on the channel, we are going to preview the next video, and that one is about negotiations, and specifically how you list your cards online. A lot of people put in a minimum for their offers, for best offers, right? I don't. I leave it as just, here's the list price, and then if you want to give me an offer, offer whatever you want. I don't give an offer minimum, and I'll explain why. Thank you, as always, for listening and watching, and I will talk to you all soon. Cheers.